You know, on the back of that trifecta of data yesterday, especially that big miss on the retail sales, what are you expecting policy-wise from leaders in China?
Well, I think there's a bit of a disconnect between what the market is wanting, especially from the equities point of view, where the indices are going, and what Beijing seems to be slowly delivering. Everybody's expecting since September, when we started to see this massive stimulus type rhetoric coming through, that there was going to be some bazooka-led incentive giving down to the consumer level at a direct basis. That has not happened, and as you rightly said, the numbers out of China yesterday were very, very disappointing, and I think that probably puts more pressure now on Beijing in terms of what they're going to do going forward. There also seems to be a big disconnect between, the rhetoric between what's coming from Beijing and the likelihood that stimulus measures of significance is probably going to get delayed until at least there is some granular conclusion as to where Trump and the tariffs are going to go. So the markets is a little bit of a Groundhog Day. We seem to lurch forward and then take two steps backwards, and that's been really the pattern for the market for the last couple of months or so.
Yeah, that's what we've been hearing as well, right? That they're keeping their powder dry, waiting until after Jan 20th and the Trump inauguration to get clarity on just how aggressive tariffs are going to be. Once that is known, though, how are they likely to approach stimulus, Andy?
Well, I think that, it's very clear that as the numbers yesterday showed that the industrial and the factory outputs are seeming to grow at a faster pace than the retail consumption side. So to me, and for what the market is probably looking for, will be either some complete direct stimulus into, whether that be consumption vouchers that's been suggested in the past, or some level of a stimulus to allow consumers onshore to feel a lot more comfortable about where they are, about their own financials, to actually start putting money into the market in terms of direct spend. So those will be the measures that we would like to see. But again, I feel that we're probably going to be looking at first quarter, second quarter 25 before you start to see those direct measures. And I wouldn't be surprised if the market continues to stay range-bound relatively, especially for Seng, until those measures are either concluded or actually come to some level of fruition. So I think investors are going to have to be patient still. I still feel the overall tone in global institutions seems to be we're going to stick with China since the September rally has occurred. I'm not yet seeing people getting so pessimistic and starting to pull away, but it is starting to get a little bit difficult to be able to keep the tone of positivity in check, at least in the immediate short term.